I'm Wayne Bramwell, I'm the Managing Director of Westgold, and thank you Red Cloud for the opportunity to bring the Westgold story to Toronto. I've only got 3 objectives today. 1, this will resonate with the audience, to be short. The second one, to be interesting, and third, to get you interested in what Westgold is doing. So let's see how we go. Westgold is 6 years old. We're a gold miner. We've been mining in Western Australia for 6 years, produced over 1 million ounces of gold to date. On track to do 260,000 ounces this year. We're marketing this as a turnaround story, and it very much is. Westgold's in its 2nd generation of management, and after 6 years under previous leadership and the cost structure in Western Australia drove some changes in the business. New leadership, I'll talk to that as we go through. I'll very much talk about a change in business strategy, about a simplification in our business and what we are doing going forward. One thing to take away, if you only take away one thing about Westgold, is that we've got a very strong balance sheet. $159 million Australian in cash at the end of December, and no corporate debt. This is where we operate. We basically have 2 operating hubs in the central Murchison area of WA. I'm really going to spin through this presentation because I think we're all keen to get to lunch. I'll talk to this in some detail. For us, leadership drives culture drives performance, and it's easy to forget that these companies are run by people. This is our board, and it's largely a new board led by Cheryl Edwards, who was the State Attorney General, previously Minister of Mines and Environment under 2 separate governments. We've got a really good balanced board. What you're seeing there is one of the best mining engineers in Australia, a very experienced corporate player in Julius Matthews, Fiona Van Manet, original board member, finance, myself, a metallurgist, and Dave Kelly, a geologist. Corporate snapshot, again, this reset story is starting to get some traction. Again, we are a little different than some of our peers in terms of having such a strong balance sheet and no corporate debt. We told the market when we took control of this company middle of last year that we would reset our business model in 3 manners. We'd stop the bleeding, we'd stabilise the business and set it up for growth into FY24. Very happy to say that our shareholder base was thrilled by that approach, because the company had not been cash flow positive since start-up, and generating free cash is what it's all about. We're getting much better in terms of how we communicate to the market, in terms of predictable and consistent is not something Westgold could have said in the past, but certainly for the last 2 financial years we've done that. We delivered our FY22 guidance, and we're tracking bang on to where we said we'd be to the half. Safety, no one else has spoken about that I've seen today, but this is something we do need to talk about. Our safety culture is an area we've had to really address in Westgold. We don't resolve from the numbers are improving, and this is an area where a cultural change also was required. Leadership drives culture, drives performance. In this area, we've changed the leadership, we've now got a new safety culture within Westgold, and the performance is rapidly improving. Oliver has left, but this is a map I like to use because WA felt like this for a long time during COVID. We were disconnected from the rest of the world and the rest of Australia. For many West Australians, we still feel the same, even though now we're allowed to travel. But in terms of simplifying the business this year, we went from a business which last year had 6 underground mines running, a 7th in development, and open pits all at the same time. A difficult business to manage, impossible to model, has now been simplified back to 4 large underground mines. This is a very basic image, but the point I'm trying to make here is that all our mines, the decline mines, are shallow. Big Bell, Bluebird, Paddy's Flat, Starlight, the names may not be very meaningful, but the point I'm trying to make with this slide is that none of these are shaft mines, they're all declines, and they're all very, very shallow. One of the things which makes us different than some of our peers is that we are owner miners. I can see someone sitting in the audience here who knows this business quite well, and one of the differentiators for Westgold is the fact that we have 132 pieces of heavy underground equipment and 500 people within our mining division. This gives us capability that some of our peers do not have. Going to spin through our 4 mines, 1 mine per slide, to try and get this thing done as quickly as we can and get to some questions, David. Let's hope. Big Bell. Big Bell's the engine room for this business. It's a large sub-level cave which took a year longer and $100 million more to start than we thought. It's been doing above design level since April last year and is now starting to be cash flow generative. This is a fantastic mine, very high tech. For us as an engine room, it generates the volume. Bluebird is a new underground mine for us, is starting rapidly to become the star of the show. This is 3.5 grams per tonne all day, every day, and currently operating at around 40,000 tonnes per month. We think we can get this mine to 60 to 70,000 tonnes a month at 3.5 very, very quickly. And by drilling it, we're getting it to that point faster than we think. Every time we drill in this ore body, which we've never drilled in the past, we keep getting positive surprises. Paddy's Flat is a historic name in Western Australia, a very old goldfield, but this is actually 4 mines in one. For us, we've been operating this mine, which is really 4 mines in one, at 40 to 60,000 tonnes a month at better than 3 grams. What we're doing here in terms of optimising this mine is we're starting now to reduce the tonnage and lift the grade. We've had a cost issue at this mine, and those cost issues are being addressed very rapidly. Starlight is it's our most northern mine. It's generated 750,000 ounces from a decline operation since its inception, 250 under Westgold management. Been under-drilled forever, and we're addressing that now with 3 drill rigs. For some here, when they see that an underground mine can make money at 2.5 grams per tonne, they would say, well, how do you do that? This thing does. Why? Because some of the stopes are 20 to 30 metres wide. It's a very simple mine, and it's very efficiently operated. Investing in the drill bit was not something Westgold's done in the past, and under new management we reactivated this to extend our ore bodies and better define them so we could become better, more efficient miners. Some of these numbers are fantastic to be able to talk to, but more importantly also are fantastic for our staff. You can start to see that we're investing in the drill bit to extend the ore bodies that they work in. Great Fingals Deeps is an iconic ore body in Western Australia. Within our package of assets, we have three assets which historically have produced over 1 million ounces. This is one. The old timers mine this thing at around 19 to 20 grams per tonne. We see this as an operation that, if the drilling comes in, can generate 20 to 25,000 tonnes a month at 5 to 6 grams per tonne. We're doing deep drilling there at the moment. This deep drilling to the left is typically 1 to 1.5 kilometres deep. If that comes in, we will restart a decline, and we can see this as an operation kicking in FY24. Financials. Section 10. I think I've only got 11 sections in this, and I'm powering through this, 5 minutes 22 in. Financial performance of the company. We're very happy to report this waterfall chart at the end of last quarter, and what it showed was that we had stopped the bleeding. Our cash position at the end of the last quarter and the beginning of this was the same. So we're halfway through the reset of this business. Overall, and talking more about being a gold operator in Western Australia, the inflationary environment hurt every gold or every miner in Western Australia. Westgold was a very high cost operator, and in some sense unfairly. We've very much started to reset that cost base, and the new management team has currently stripped 16% out of our cost base and starting to really tighten up what we do. Operating discipline, financial discipline, these are things which we're getting far better at, and with that will come greater profitability. Our hedge book is something which has been a millstone for some time. I mean, Westgold has no debt other than $20 million worth of equipment finance, but has historically run a very large hedge book. I'm happy to say that hedge book will be done and we will be unhedged by July. Last slide. Why Westgold? Really simplifying the business for us, less is more. Less complexity equals more profitability. The turnaround is early in its days, and I must say I'm really happy that the management team and the workforce are really starting to buy into making this business more profitable. Efficiency and grade is the focus. With ore bodies like Bluebird running consistently at 3.5, we're starting to see something quite different within Westgold. Commercial opportunities, and when I speak to that, we're a large business, 1,300 staff, lots of underground equipment. We've never really leveraged our scale, and that's something which we're doing financially now and starting to get the benefits of a company as big as we are. Drilling, which is something which we've not done for 5 years. We've been shrinking the reserve for 5 years while our gold production's gone up, and that's a 5-year problem that I can't fix in 12 months. Happy to say that with 8 rigs running underground, 1 on the surface, that we will fix this problem, but that'll take a little bit of time. Investing in the future. The cost structure in WA for everything is still very high, and as a business we have been so exposed to diesel, whether it be our heavy equipment or our power stations. In FY22 that had a significant impact on our profitability. At one point we were consuming 8.5 million litres of diesel a month. That's a long time standing at the Bowser. I'm happy to say that number's down to 5.1 million litres now, and will shrink again later this year as we move away from diesel-fired power stations and start to bring online new gas-fired power stations. Really, that's it. I said that I'd be short. Whether I was interesting, down to you. But anyway, hopefully I've got you curious enough to have a look at this company, Westgold Resources. David, thanks.
Yeah, great, thank you.